For what feels like years, Japan's auto giants have looked like they were asleep at the wheel during the EV revolution. But now, with a new trade war brewing, investors are asking a much bigger question. Are we about to see a massive comeback or a total collapse?
And that's really the core question for investors today, isn't it? Are we looking at a classic case of sleeping giants about to awaken, or are these legacy titans falling into a value trap? Because while the market was focused on their EV strategy, a massive structural shock just hit the industry, and it fundamentally changes the game.
And here it is, 15%. We're talking about a new U.S. tariff on Japanese auto imports. Now, this is so much more than just a tax. Think of it as a catalyst. It's forcing these companies to speed up their plans and completely rethink their supply chains. And it's happening at a moment when they are most vulnerable.
All right, so here's how we're going to break this all down. We'll start with the late mover crisis, then look at Toyota's hybrid fortress, their tech counterattack, the wider field of play, and finally, we'll get to the investor's verdict.
So this new tariff really throws them into a two-front war. On one side, you've got this pretty clear technology gap with the pure-play EV makers. And on the other, you have this new trade barrier that's just squeezing their margins, forcing some really tough decisions about production and pricing.
And look, this isn't some vague threat. It's incredibly specific. For Toyota, we could be looking at a $9.5 billion tariff burden. For a company like Subaru, whose business model depends on exporting the Forester, it's a direct hit to profitability. This isn't just about a few cars. It attacks the very core of their export-driven business, turning their most profitable vehicles into potential liabilities literally overnight.
Okay, so this is where it gets really interesting. There's this great paradox playing out right now. The slowdown in global EV demand is, in a strange way, a blessing for Japan's hybrid-heavy strategy. But here's the billion-dollar question. Is this a temporary break that proves their caution was smart, or is it a dangerous illusion that's just masking a much bigger long-term problem?
And that leads us right to Toyota's strategy. You have to admit, it's bold. Some analysts would even say it's incredibly risky. They're betting that a strong defense built on a fortress of hybrid profits is actually the best offense in this EV war.
And when we say fortress, we really mean it. Just look at this. By 2025, nearly half of their U.S. sales will already be electrified, mostly through hybrids. And that provides a steady river of cash flow that their pure EV rivals can only dream of.
So with that strength, they make a very pragmatic move, cutting their 2026 EV production target by 30%. This lets them avoid the inventory problems that are plaguing their competitors. But it's also a huge bet, a bet that the EV market will stay cool. If demand suddenly re-accelerates faster than they expect, Toyota could be caught completely flat-footed.
This is what we're calling the hybrid shield strategy in action. It's all about using their dominance in hybrids to generate a huge war chest of cash, which then funds a massive R&D push into what they believe is the real future of electric mobility.
So, where is all that hybrid money going? Well, it's funding an incredibly ambitious plan to try and leapfrog the competition with what many see as the holy grail of EV technology: solid-state batteries.
I mean, just look at this timeline. It's incredibly ambitious. They're laying out a multi-stage assault on both battery cost and performance. Now, let's be clear, there are still huge technical hurdles to overcome in moving from a pilot program to mass production. But if, and it's a big if Toyota can pull this off, it could give them a decisive long-term advantage.
So why is solid state such a big deal? For you, the driver, it's pretty simple. Imagine an EV that can charge up in the time it takes to fill a gas tank, go twice as far in a single charge, and is fundamentally safer than the models we have today. That's the promise. That's the game changer. But here's the reality check. This is a high-stakes global race, and Japan's leadership is far from guaranteed. You have Chinese rivals like Dongfeng who are already road-testing their own versions right now. The real question isn't just about who invents the tech, but who can commercialize it and get it to scale first. Can Japan move fast enough?
Now, Toyota might be the biggest player here, but they are not the only one in the game. Let's take a quick look at how the rest of Japan's auto industry is handling this transition, because their strategies are diverging, and sharply.
Take Nissan. They are in the middle of a radical and, frankly, painful transformation. This re-Nissan plan is a direct response to a major profitability crisis, moving away from that old volume-at-all-costs strategy. It's a tough process for sure, but absolutely necessary to stabilize the company for the long haul.
Honda, on the other hand, seems to be sending some really mixed messages to the market.
They're delaying their flagship technology spearhead, the Zero series, but a premium Acura is moving ahead just fine. For an investor, that kind of strategic dissonance can really undermine confidence at a critical time like this. And then you have the dark horse, Suzuki. They're playing a completely different game. By building their new affordable e-Vitara EV in India, they're bypassing Japan's high-cost structure entirely. This is a classic disruptive move. While the giants are fighting a high-tech war, Suzuki is quietly building a low-cost EV that could completely upend the affordable end of the market.
Okay, so what does all of this mean for you, the investor? We've seen the tariff shock, the very different strategies, and the huge technology bets. Let's put it all together and weigh the bull and the bear cases for Japan's auto giants.
So which is it? Are these companies sleeping giants poised to wake up and dominate the next phase of the EV market? Or are they legacy dinosaurs, rich in assets but just unable to adapt fast enough? The bull case really centers on that hybrid shield funding a huge leapfrog in solid-state batteries. The bear case, though, fears that the new tariff is a crippling anchor and that they'll simply be outpaced on the very tech they're banking everything on.
In the end, this is a bet on a different kind of innovation, one that's based on patience, pragmatism, and profitability. The race has completely changed. Japan is betting that the tortoise, funded by hybrids and armed with solid-state tech, can still outlast the hares. The big question for investors is, are you willing to wait for that tortoise to cross the finish line?